Good morning, everybody. Hey, it is Tuesday and May 17th. We're a little more than halfway through the month of May. And so that means we're really halfway through this second quarter. We got numbers coming out this morning. We'll talk about that and more when Dave joins us here in just a few moments. We've got some good news. We got some not so good news, and we'll talk about that when Dave joins us. But before we do any of that, let's just remember that there's only one thing that any of us can control when it comes to our portfolio, and that's how much risk you have. And the question is, do you know how much risk you have in your current portfolio? And if you don't know, on a scale of 1 to 100, that can be a problem, especially if you're 5 years out from retirement or you've been retired less than 10 years. Give us a call at 863-382-0037. And we'll get started walking through our core retirement design. Hey, with that, we've got Dave coming up next.
Simple minds there. Here at 72 degrees here. It's 8:39. I'm Morning Dave. And yes, it's time to find out whether your money's doing anything good this morning. Spoiler alert, things are looking pretty good early on this morning. Let's find out what's going on with your IRA and your 401k with the help of Phillip Statler from Statler Financial Services, who's on the line. Phillip, good morning. Green ink this morning. It's kind of a nice thought, isn't it?
It really is. And not just like yesterday where it was, meandering between green and red. Today, it's substantially in the green. And so we're excited about that.
Yeah, it's kind of a surprise, really. I mean, we're getting spoiled on the notion of just, days, and this one actually looks like it might start out fine. Now, let's see if we can keep it going. Setting the table for it to go back to yesterday, blue chips kind of ran out of steam at the end of the day. The Dow ended up real close to the zero mark, up 26 points, but green. Standard & Poor's ended up off about 15.88. That was about 1/3% down. Both of the indexes were in green ink until about 3 p.m., and then we just ran out of steam. NASDAQ, you and I were talking before we went on the air. I got to believe that the doldrums that NASDAQ is in is just repricing the growth stocks based upon interest rate expectations. NASDAQ was down another 1.2% yesterday, down $142, and it just got to be a notion of that the expectation of more expensive money to borrow has got to be repricing the growth stocks and the small market ones, don't you think?
Well, that's always possible. I mean, and we'll see as the earnings continue to come out. And then, of course, what kind of forecasts we get, what kind of projections we get, that's going to play a big role for those companies as well.
Absolutely. Guidance has been obviously the thing that really has been driving the quarterly reports, what should be anyway, but it's carrying even more weight this earnings season. We've been all concerned about retail because retail drives our economy here, and we start out this morning with the overall retail sales around the country, and on balance, I'm calling this a pleasant surprise. They expected our retail sales last month to grow by 1%. They grew by 0.9%, which is a close miss, but then the government revised March upward and doubled the growth rate during the month of March. So on balance, the overall retail sales picture, I'm calling a win, even though the month by month was slightly off the expectation.
I agree. I think that was, especially the revision for the month before to more than double what it was. So that was good news. And I can't see anything, at least looking backwards, that says we had any issues with retail. I mean, it's looking pretty good compared to what the expectations were.
Yeah, we're still perfectly happy to spend money in the country, even with all of the chatter about an impending recession. And it gets even better when you start excluding the big-ticket items that are in some problems right now. You eliminate automobiles, and obviously that market's got some warps in it right now with the price of used cars being at a premium and the difficulty getting new ones. But once you exclude autos, they were expecting a 0.4% increase, and we got 0.6%, beat the expectation by half. And once you get rid of gasoline, which is no fun to begin with, month over month they were expecting a 0.7% increase. We got a full 1% increase on retail sales. In other words, we're going to the stores and spilled burning plastic like it's going out of style, aren't we?
We are. And what just kind of hit me, though, was that just because retail sales are doing well, let's remember that the cost and inflation, things have gone up in price, right? So it's still retail sales just means people are shopping. It doesn't mean the retail industry is making money. And we'll talk about that when we talk about Walmart in a little bit, but
Yep.
it does, right? I mean, retail sales, that's good. That means we're spending money, but it doesn't mean that the retail industry is making more money.
That's true. The net growth, well, you really kind of got to do a little bit of math. You take the retail sales, including autos and gas. It was up a full 1% last month. Okay, fine. The prices were up probably close to 0.7%. So the real net growth was closer to 0.3%, which is, okay, good news. It's growth, but it kind of takes a little bit of a bloom off that numbers beat, doesn't it?
It does, but don't get me wrong. I'm so excited that it is going up the right direction because it means people are still spending money. My concern is where they get the money to spend, and we'll see some of those numbers over the next couple quarters. Really, will be telling.
Absolutely. As we look at it, and like I've always said, there are legs to a stool that create a recession. One of them are problems in the employment market, which right now we're overly hot, if anything. Another indication of the potential of a recession is consumer spending activity, and so far that leg of the stool isn't being built yet either. So, are we looking at a recession before the end of this year? Right now, it's looking less and less likely. And the more we see growth in the retail figures and the hotter the economy for the employment market stays, the less likely of a severe recession next year. Now, the Federal Reserve can change all of that at the end of the month with their next meeting if they bump us another 0.5% and things go crazy on the stock market. But at this point, anyway, I'm starting to develop a little bit more of my old starry-eyed optimism back again.
Well, I think that it definitely looks better today. It's going to be, we always say, it takes 2 quarters to make the recession. And so we'll see what GDP number comes out. Of course, we still don't have a final GDP number, but we'll see what that finalizes out. And then we'll just have to cross our fingers for the second quarter.
Yeah, it does need to be brought out that the first look at the gross domestic product from last quarter was not pretty. It was actually a negative number. So as you say, 2 quarters of that is bad news, and we can cross our fingers that we dig ourselves out of that hole that we got on the first blush with the two revisions to go on last quarter's GDP. But at the very least, there's some optimism that this quarter isn't going to look as bad as last quarter. I'm happy to take that. Talking about less good news. Earnings season continues, and we kind of got a tale of 2 stores going on. I was making fun of Walmart yesterday because they put out a thing saying we're overexposed to lower-income shoppers, and that causes us concern. I was figuring that was trying to reduce expectations for their quarterly report out this morning. They actually had a miss, didn't they?
They did. They did. It was not pretty when we look at Walmart. They missed on the bottom line. Now they did better on the top line. They've had better than expected sales, but again, remember inflation has raised their cost across the board, and so they missed by 18 cents a share. Came in at $1.30. We're looking at some of their numbers. Their outlook for sales is still pretty good. As a matter of fact, they raised their outlook for sales. They decreased their anticipation for a profit. They increased sales by 1% and they decreased profit by 1%. So I think that's probably weighing pretty heavy on Walmart as well. They are trading down right now 6.25%. So that's a pretty substantial decline for them. Still not at their 52-week low, but they're heading that direction.
And they're one of the more widely held stocks out there. They're kind of up there with Apple as being part of a lot of portfolios, so that's not good for anybody's retirement portfolio. That company does have a little bit of a rock and a hard place between them, especially with import costs being accelerating as fast as they are. As a low-price leader, their only way of staying competitive and showing that low-price leader position is to accept skinnier margins if transportation and wholesale costs are going up. And that doesn't bode well for them for the next 3 quarters as we try to get out of our supply chain issues.
Well, that's true. And one of the key areas they did point out was not just supply chain, but they really put a lot of focus on the transportation costs increasing so much with diesel fuel going up so much. So that was a big deal for them.
Plus, I know they're having trouble getting drivers, and they bumped the starting wage up for their truck drivers as well. And add on the fact that legendary world about Walmart being a low-paying employer, they're getting pressure on minimum wage laws as well to push their payroll numbers up. So, yeah, Walmart's not going anyplace, but they may have a couple, 3 difficult quarters ahead of them.
They are. I mean, let's face it. They're going to have some because of what they said yesterday, right? That they deal with a lot of low income folks, and so inflation is going to continue to put pressure on them.
Absolutely. Now, on the other side of the fence, we kind of use this as a bellwether for the housing industry as well. Home Depot was just almost a completely different story, I gather.
It was, yeah. They came in and had better than expected profits and better than expected revenue and better than expected comparable same store sales. So, man, they just kind of hit it out of the park for the quarter. So they had a substantially across the board, and that was some good news for them. They are up about getting close to 3.9% right now. So some good news for Home Depot. And so tomorrow it's going to be interesting too, Dave, because tomorrow we get new home sales and home starts and home permits. So that's going to be interesting.
And we'll also see Lowe's, which is another bellwether in that sector. Home Depot, you and I have always said, is a good bellwether as to what the housing market might look like as far as construction, remodeling, and home improvement is concerned. If the national figures back that up and Lowe's follows suit as well, we might actually have one more leg to be optimistic on.
That's true. I mean, we do have some stuff coming out that could be could give us some good news.
I'm just rooting through, looking for rose-colored glasses wherever I can, because the last couple of weeks have been kind of crappy, if you want to put it bluntly. My list of stocks that are due to come out includes an awful lot of overseas issues. You got any other indications from reports out this morning?
So I have a couple. I have and I don't have direct numbers, but I have the direction. I got United Airlines. They raised their current quarter revenue forecast and said expect the busiest summer since the pandemic began. And I can believe that, being flying around the last 3 or 4 weeks a couple times. So they're up 3.8%. And then Take-Two Interactive, they're the gaming guys. That they have a lot of gaming platforms. And so they missed. This is one of those, contrarians, right? They missed on earnings. They missed on their booking metrics that they use. But their stock's going up today. And so I found this point interesting, that within the report that I follow, it pointed to the history of the company giving conservative guidance. And so
Walmart.
And they're in the process of buying out Zynga, which is another, I guess, gaming platform. So, but Take-Two's up 5.8%. And then let's finish with this one. There's no earnings here, but I do want to mention this one because a lot of players here, Citigroup is actually seeing a bump this morning. Here's the deal. Berkshire Hathaway took a $3 billion stake in the bank during the first quarter.
I saw the news item cross my ticker. I was wondering how that was going to do to Citi.
Yeah, so that's got Citibank up 5.1% right now. So that's a pretty big mover for them.
If Warren Buffett likes it, a whole lot of investors feel they need to as well, right?
Yep, exactly. There must be something he sees there.
Yeah, the Oracle of Omaha, his eyesight hasn't failed yet. At least not completely, anyway. Resetting the table, we're looking at a mixed bag yesterday. A little bit of growth on the bluest of the blue chips in the Dow. The rest of the index is off fractionally. 45 minutes before we open this morning with some good news on the economic reports. How we doing?
Well, we are still looking pretty good, Dave. We got the Dow Jones 30 up 1.1%. The S&P 500 is actually up almost 1.5%. And the NASDAQ 100 is up 1.75%. Let's throw in the Russell 2000 today because it's looking pretty good. It's up 1.6%. So good news across the front. The commodities still, we've got silver heading up almost 0.75%, but still not up to $22 yet. And then we got gold up 1%, still well below 1900, is 1831 right now. And then crude oil is off its highs this morning, but still up about 0.1% from where it closed yesterday at 111.95 per barrel of oil.
Well, pooh, you had to give me that bit of news. I do notice the interest rates continue to climb. 30-year Treasury today, I'm looking at 3.13%. Haven't seen a number like that in quite some time, have you?
No, yours must be delayed a little bit. I've got 2.944 right now, but it's but it's still fluctuating and it is heading in the upward direction.
Yeah, I'm looking at it being up, and I don't like that number a tiny little bit, but we knew it was going to happen. Overseas markets, the Asian Rim and the European markets, all in green ink. Some of the European markets up by as much as 1.5% halfway through their day, so they're looking at us and saying, yippee. Somebody want to figure out how to stabilize one's retirement fund and get the growth opportunities where they exist, but at the same time minimize the downside. How do I find you to get that picture?
Devin, give us a call at 863-382-0037. And let's walk through our core retirement design. They can book a 30-minute phone call where we'll answer their questions, see if they're on the right track or not. It's that simple. Just give us a call at 863-382-0037. And then this weekend, catch us for our Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730 and 95.3 FM.
And back here again tomorrow morning with an update up to the minute as to what's going on. Phillip, thank you so much. I do appreciate it.
All right, man. You have a great day.
Take care. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to thank you for joining us, and I hope that you'll join us again tomorrow. Share this with your friends and family. And until tomorrow, have a great day. Bye now.